Okay. Right. So in our syllabus, chapter 1 was introduction to accounting and accounting environment, accounting process. Okay, so we already discussed the chapter 1. And basically from chapter 1, we get MCQ questions. So all the past paper questions I have given it. So today in the later on, I will discuss some important MCQ questions on that. Then today's session is accounting equation. That is chapter 2, accounting equation. So this is very important chapter. As you all know, every year there is a compulsory question from accounting equation. Every year there is a compulsory question from accounting equation. So if we analyze the past papers, if I have taken from 2012 onwards, 2012, 13, 14, 15, 16, 17, 18, 19, 20, 21. So every year there is one question, one main question from accounting equation. So we can't ignore this chapter. Very important, right? So you can easily get about 10-15 marks out of this, right? And another thing you need to understand is in the past papers, the exam papers, they don't just ask the accounting equation, right? They don't just ask the accounting equation. They might give some other chapters in between the accounting equation question, right? For an example, in the accounting equation question, they might include preparation of financial statement, basic financial statement, or they might include the bank reconciliation statement, control account, error corrections, right? So these chapters go together, right? You need to understand the basics of each and every other chapters. Okay, so I assume that you all have the basic knowledge, only just the basic knowledge on preparation of financial statement that you do if you have done O levels, business studies and accounting, the basics, the income statement and statement of financial position, and also the bank reconciliation, control accounts, correction of errors. Okay, right. So we will start with the introduction to accounting equation. Introduction to accounting equation. Right. So this is an example. There is a person who wants to start a business. There is a person who wants to start a business. right? So we call him the owner of the business. He's the owner, right? So he has some money. Assume that he has 100,000 cash in hand, right? So he invests this cash into the business. He invests 100,000 cash to the business. So that is a transaction. That is a transaction. So what is a transaction? Transaction, it is an exchange, right, between two parties with a monitor. There is a monetary value. So this is the monetary value. So investment of capital is a transaction. That's the first transaction I have taken. So number one, the first transaction I'm taking here is introduction or investment of capital. Investment of capital, 100,000. 100,000. Then the second transaction I'm going to take is, let's say this 100,000 is not enough. 100,000 is not enough to run the business. So what they can do is the business can take a bank loan. Assume a bank loan. They're taking a bank loan of 50,000. Right. Now let's derive the equation. So we'll start with the first equation. Once the owner invests capital, owner invest cash, the business will have cash 100,000. So cash is an asset. Cash is an asset. So the business will have an asset worth of 100,000. And in accounting, we always think that the business and the owner is considered as two different parties. The business and the owner is considered as two different parties, right? If the owner gives money to the business will have to repay the money back to the owner. So it will create a liability of 100,000 to the business. So this is a liability, 100,000. So what is this liability? This is called capital. So the initial accounting equation, we create the initial accounting equation, the asset, which is equals to the capital, 100,000. Then the second transaction which we have taken is the bank loan. Now, the business will have 150,000 cash. The owner has invested 100,000. The bank loan is 50,000. So total, there is 150,000 cash in the business. So total cash, 150,000 in the business, right? Then the liabilities, total liabilities, 150,000. Total liabilities, total payable is 150,000. 100,000 is payable to the owner. Another 50,000 is payable to the bank. Therefore, the liabilities can be divided. The entire total 150 liability, we divide owner's liability and outsider's liability. The owner's liability is called capital. Right? Owner's liability is called capital. Then outsider's liability is called just liabilities. So we derive the second equation. The second equation, assets equals capital 100,000, liabilities 50,000. Capital 100,000, liabilities 50,000. Then the third step, then what happens? The business will continue. So when the business continues, there will be income and expenses, there will be sales, and there will be profits. Assume that they earn profits 25,000. They earn a profit of 25,000. So what happens? Profit 25, which is let's say it's cash, received cash. Now the total cash value 175,000. Total cash value is 175,000, right? So who will get this profit? Who will get this profit? This profit will be given to the owner. So owner will get the profit. So we add this 25,000 to the capital. So the profit will be added to the capital. Okay, so the profit will be added to the capital. Then we derive the equation. Now cash 175, capital 100, the profit 25, bank loan 50. So the equation will be assets equals capital plus profit plus liabilities. So always remember the profit portion is added to the capital. Profit portion is added to the capital. So third equation, assets equals capital plus profit plus liabilities. Right. Now we know how to calculate the profit. Profit equals, what is the equation? Profit equals, yes, profit equals income minus expenses. Very good. So we change this profit. Profit means income minus expenses. Profit means income minus expenses. So another equation can be derived from this. Assets equals capital plus income minus expenses plus liabilities. Then from the same equation, this same equation we can write in different ways. The same equation we can write in different ways. Okay, now let's say there is a minus figure, minus expenses. So if you want to make a minus into plus in an equation, if you want to make a minus figure into a plus figure in an equation, what you have to do, you have to change the sign from, minus becomes plus when you change the sign. So another equation, a very important equation we can derive. Number 5. Assets plus expenses. Assets plus expenses equals capital plus income plus liabilities. So this is how we derive the accounting equation. This is the development of accounting equation. And we don't use all these equations. We use mainly the second one and the fifth one. These two are more important for us. Assets equals capital plus liabilities. Then assets plus expenses equals capital plus income plus liabilities. Right? So this is very important because now in the accounting process, we prepare something called trial balance, and we prepare the statement of financial position. So to balance the statement of financial position, this is what it is important. Assets equals capital plus liabilities, right? And in the trial balance, we have this asset and expenses. These two considered as, now once you are done with this, we will be doing the double entry system. So in the double entry system, asset plus expenses, asset and expenses, increase debit, decrease credit. Increase debit, decrease credit. And the other three, capital income liabilities, increase credit, decrease debit. I will be doing that later. Okay. Right. Now let's move on to the questions. Right. Let's go to this a small presentation. Accounting equation. There are a few concepts that we need to understand. Number one, accounting entity concept. What is accounting entity concept? It called a business is treated separate from the owners. As I said earlier, owner and the business is considered as two separate parties. So this is accounting entity concept. Hence, transactions are recorded from the point of view of the firm and not the owner. So when you are preparing accounts, when you are doing accounts, you have to always think about business point of view. Business point of view. Hence, the capital is a liability. So that is why we consider the capital as a liability. Capital is not an asset. Capital is a liability. And drawings is an asset. Okay. So remember this point. And the next important concept is money measurement. In accounting, we record only the resources that have a monetary value. Monetary value. Financial. Okay. Then accounting as a whole based on a single equation is assets equals equity means the capital plus liabilities. Assets equals capital plus liabilities. Okay. And the relationship between the double entry. Accounting equation is a simple way to illustrate two facts about a business, which is what business owns and what it owes. So I've given these points in order for you to understand some important concept points for MCQ. Right? Sometimes you need this knowledge for MCQ questions. Right? Entire double entry accounting concept is based on the basic accounting equation. The accounting equation should remain in balance at all times because of double entry accounting. So for double entry system, the main reason is the accounting equation. Okay. So this is how we derive the accounting equation. In exam questions, you will get this equation in different methods, different ways. Okay. Now let's do an example. So from the example, I will explain everything. Example 1. Can you all quickly do this example? Take your books, take your pens. Example 1. Let's do this. Easy, right? We will start from the basics and we will do more and more complex questions. Okay, can you start this? Example 1. Let's do this. No need to write the question, just the answer. Accounting equation. The equation which I am going to use is assets equals capital plus liabilities. Let's start. First of January, invested cash 100,000. So we can write cash will increase by 100,000 and capital will increase by 100,000. This is a very simple question. Okay. Purchased a motor vehicle 45,000. Then what happens? Cash will reduce. We give cash and buy a vehicle. So cash will reduce by 45,000. Motor vehicle will increase by 45,000. Cash will reduce, motor vehicle will increase. There is a question, sir. Do we have to write within the brackets? No need. If you just say minus, it's minus 45. Even if you write within the bracket, that's fine. It's all right. Cash purchases, you give cash and buy stock. If they don't mention the asset name, if they say just purchases, that means they are purchasing inventory, stock purchases. Cash will reduce and stock will increase. Cash will reduce and stock will increase. If you have any doubts, want to clarify anything, just you can speak or else drop a message in the chat box. Right. Question number 4th January. 4th January, what happens is cash sales 30,000 worth of stock. We are selling at 48,000. So we are giving stock worth of 30,000. So stock will reduce by 30,000. And we get cash. It's a cash sales. Cash will increase by 48,000. Cash will increase by 48,000. And there is a profit of 18,000. Profit is 18,000. Then cash minus, cash plus 48, stock minus 30, and profit plus 80. Profit plus 80. There is a question. Why motor vehicle didn't increase capital? No. When buying a motor vehicle, they are saying purchased a motor vehicle. So who is purchasing? If they say purchased a motor vehicle, it is the business is purchasing. When the business is buying, the business cash will reduce and the motor vehicle increase. Right? If it is capital increase, then the transaction should be owner invested a motor vehicle. If the owner invested a motor vehicle, then the capital will increase, motor vehicle also will increase. This is not owner investing a vehicle. This is business is buying a vehicle from business cash. Is it clear? Fifth January, obtained a bank loan. When we obtain a bank loan, cash will increase and the liability, the bank loan will increase. Cash will increase by 60. The bank loan liability will increase by 60. Sixth January, repayment of bank. When we repay, the reversal of obtaining the bank loan. Cash will reduce, bank loan also will reduce. That is the repayment. Reversal of this. Drawings. Drawings means the owner withdraw money from the business. So that's the reversal of capital. Capital is investment of capital means cash increase, capital increase. Then if he takes money, then the reversal of the same thing. Cash reduce, capital reduce. The description is drawings. Cash reduce, capital reduce. Eighth January. Interest income received. So this is income. Now, when I was explaining the development of accounting equation, I told you that the profit will be adjusted in the capital column. Profit will be adjusted in the capital column. So profit means income minus expenses. So if there is an income, capital will increase. If there is an income, the capital will increase. But if there is a loss, the capital will reduce. Or if there is an expense, the capital will reduce. So this is interest income received. Interest income received means it is income. So cash increased by 48,000. Capital will increase by 48,000. Cash will increase. Capital also will increase. 9th January. Electricity expenses paid. Expenses means capital reduce. Expenses right.
அதுக்கு bottom இல்ல.
Okay, complete the next two. Electricity expenses paid means cash will reduce and the electricity will reduce the capital minus. Finally, the owner, Mahinda, invested additional capital. So it is again the asset will increase and the capital also will increase by 15,000. Okay, now can you all calculate the total of each column? Calculate the total of each column. Tell me the answers. Okay, so let's calculate the total assets. Okay, I got few answers. Okay. Assets 143, yes. Right, good. Total assets 143. Total capital is 115. Liabilities 28. Okay, now the next point. Okay, let's derive the so let's develop the profit equation. Now, another important thing in the accounting equation is the profit equation. Understanding the profit equation. So the profit equation is derived using the capital column. Profit equation is derived using the capital column. If you see the capital column, this is the capital column. What you have in the capital column, there is opening capital and closing capital. Is opening capital, closing capital. Then the profits, profit, income, expenses. We have these three, right? And drawings and capital, additional capital. This is an additional capital, 15,000. Okay. Now what I'm going to do is I'm going to write an equation to find out the closing capital balance. So number 3 now. So number 2. Wait. Let's calculate the profit first. Number 2, let's calculate the profit. Can you all tell me how much is the profit? How much is the total profit? The net profit. Net profit of this business. What is the net profit of this business? What is the net profit? So net profit, how do you calculate the net profit? Income minus expenses. Net profit is calculated using income minus expenses. Income minus expenses. So here income, there are two items. Profit of 18 and interest income of 48. So we'll take those two, 18 and 48. There is a total income, profit income of 66,000. I took the profit here. There's only one expense, which is electricity, 16. So 50,000 net profit. 50,000 net profit. Calculation of profit. It's 18. Here there is 48 minus 16 is the net profit. So we have to take what I have highlighted in the green. Okay, still we are doing the basics. Okay. Now the third step, using this capital, and the profits. Let's calculate the closing capital. Calculation of closing capital. How do you calculate the closing capital? Opening capital is 100,000. This opening capital is 100,000. Then there is an additional capital of 15,000. So we add additional capital. This plus this. Then there is a net profit of 50,000. So I took these three items. 50,000. Then the drawings of 50,000. Drawings 50,000. And finally, you get the closing capital. So these are the main items. Closing capital is 150. Same thing which is in the capital column. We have taken a summary calculation of closing capital. This is a summary. Opening capital plus additional capital plus net profit minus drawings will be the closing capital. Calculation of closing capital. You can write this down. That's number 3. Number 1, we did the accounting equation. Number 2, we calculated the profit using the income statement. And number 3, we took the summary to calculate the closing capital. Opening capital plus additional capital plus net profit minus drawings. Then the same thing we can write in an equation. This closing capital calculation we can write in an equation. So let's move on to number 4, the fourth step. So I will call it development of profit equation, number 4. Development of profit equation. Development of profit equation. So what is the closing capital equation? Now, the same thing I'm writing as an equation. Closing capital equals opening capital plus additional capital plus net profit minus drawings. So that is the equation I derived from this. This is how we calculate the closing capital. Now let's convert this equation to net profit. Let's take the net profit in one side and keep everything in the other side. Okay, so we change the side. Net profit will keep in the same side. This will keep in the same side and convert everything into the other side. If you keep the net profit in the right side and put everything into the other side, derive the equation. Closing capital minus opening capital. This becomes minus. This becomes minus. Drawings become plus. Closing capital minus opening capital minus additional capital plus drawings. So same thing can be written as net profit equals closing capital minus opening capital plus drawings minus additional capital. So this is the equation that we normally use. This is the equation we use to calculate the profit, net profit using the capital. This is the equation we use to calculate the net profit using the capital. Now let's calculate the net profit. Okay, closing capital is 115. Opening capital is 100,000. Drawings 50,000. Additional capital 15,000. So it is very easy, very simple to use the net profit equation. The reason is, in a business, there will be thousands of sales and expenses, income expenses. There are many. But identifying the closing capital and opening capital is easy. And the drawings and additional capital, those are only few transactions. So at any point, we can easily calculate the net profit using this method. Right? At any point, we can calculate the net profit using this method. So you don't need to prepare an income statement. You don't need to calculate income expenses separately. This is the easiest way to find out the net profit. The short method is this. understand or remember this equation, which I have highlighted in red. Net profit equals closing capital minus opening capital plus drawings minus additional capital. There are many past paper questions on this. We will discuss today. Okay. Net profit, we will get the same answer. 50,000. So in both methods, we will get 50,000 as the answer. There is a question. Why do we add drawings? Drawings is added. Now, this is how you calculate the closing capital. So when calculating the closing capital, drawings was deducted. So here the same equation only we have converted to net profit. So when calculating the net profit, whatever the owner has taken, now owner has taken from the business, that should be added. That is why we add. And additional capital means owner has invested more. So that should be deducted. Is it clear? When calculating the net profit, in the capital, right, in the closing capital, there is additional capital who the owner has invested. So that has to be deducted. So additional capital minus. And drawings means owner has taken from the business. So that has to be added. Very simple equation. So you need to remember this equation. Okay. Next. Is it clear to everyone? We did a very simple basic example. Recording the transactions in the accounting equation and developing the profit equation. Now let's do another example. Example 2. After this, I will do past papers. Okay. Let's do this. Example 2. Okay, I'll give 5 minutes. I'll give 5 minutes for you all to complete this question. Counting equation. Example 2. I'll show first one, cash increase, capital increase. Can you all complete this? Okay, so here we go. 2nd March. Cash purchases, we give cash, buy stock, cash minus stock plus. Credit purchases. Now, this is purchasing on credit. If we are purchasing on credit, then what happens? If we are purchasing on credit, we get the stock, but we don't pay cash, right? But we have to pay that money later. So it will create a liability. The liability is creditors. So stock will increase by 700. Creditors will increase by 700. Creditors will increase by 700. Yes. 4th March, cash sales, that is 300,000 worth of stock. We are selling at 500. Stock will reduce by 300. Cash will increase by 500, and there is a profit of 200. Next, there is a doubt. Can I write trade payable instead of creditors? Yes, trade payables, creditors, same meaning. Fifth March, credit sales. So we are selling on credit. When we are selling on credit, we are not getting the money from the customer. So if we are not getting the money from the customer, it will create a debtor balance. So stock will reduce, debtor will increase. Debtor will increase and the profit will increase. That is 5th March. Okay. Next, return inwards. What is return inwards? Return in. What we sold was returned by the customers, returned by the debtors. So actually, return inward means that is the reversal of credit sales. Reversal of this. Reversal. Then the stock will increase. Now here stock reduced, then stock will increase, data will reduce, profit will reduce. So 6th March, the transaction stock increase because the customer returned the goods to us. Stock increase. Then the data will reduce 90 and profit also will reduce by 30. Okay, so we move to the next. Now, how it's profit? Profit means now here we have added the profit now. The profit only reduced here. Okay, it's not a loss. Okay, it's not a loss. The profit we added was reduced. Okay, when we are preparing the income statement, we adjust it through the inventory. Okay, the cost of sales. Okay, so don't write as a loss. So it's a reduction of profit. But we sold, it had a profit, and when it is returned by the customers, the profit only reduced. Okay, next, return outwards. Return out. Outwards means it is the reversal of purchases. So this is purchases. This is purchases. Then return outward means reversal of these purchases. Stock will reduce and creditors also will reduce. Return inward is reversal of credit sales. Return outward is reversal of credit purchases. Remember those two. Next, obtain the bank loan. We have done this earlier. Cash increase, bank loan increase. Drawings. Cash will reduce and the capital will reduce. Can you explain a bit more about return outwards? Return outwards. Return outward means we purchase on credit. When we purchase on credit, stock will increase and liability will increase. Now, same thing, what we purchased, we are returning. We are sending back to the supplier. So when we are sending back to the supplier, stock will reduce because we are giving the stock. Stock will reduce. And the amount payable to the supplier, amount payable to the creditor will reduce because we have returned. Okay. That is why stock minus, creditor minus. Is it clear? Right. 10. Repayment of bank loan. Cash will reduce and bank loan will reduce. Cash reduce, bank loan reduce. Received from debtors. Now here there is a debtor. Now here 900 debtor is there. So he is giving us money. He's giving us money 150,000. And when he is giving money, we are giving a discount of 20,000. So that's the transaction. So I'll write it separately. First, receiving from debtor. When we receive from debtor, we get cash. we get cash, and data will reduce. Cash increase, debtors decrease. Cash increase, debtors decrease. Okay. Then discount allowed. We are giving a discount. Discount allowed is giving a discount for debtors. Then debtor will reduce. Discount allowed. It is an expense. Expense comes under capital. Expense comes under capital. Okay. Debtor will reduce. Capital will reduce. 13 March, payment to creditors. When we pay, cash reduce, and creditors also will reduce by 130. Fourteenth is discount received. We are getting a discount from the creditor. We are getting a discount from the creditor. So it is an income. Remember, discount allowed is an expense. Discount received is an income from the creditor. So income increase, capital increase, creditor decrease. So these two transactions, discount received and discount allowed. See the difference between these two transactions. Discount received, discount allowed. There is a question. So can we show 11th and 12th transaction, these two, as a single entry? Yes, you can do that. So cash plus debtors, you have to take the net minus 170 and discount allowed minus 20. That is also possible. Okay, even the creditors and the discount received, you can add together and write as a single transaction. That is possible. Okay. Then finally, the electricity payment, 32,000. It is expense. Cash minus expense plus or capital minus. Can you calculate the total? Total assets, liabilities, capital. Get me the answer. So is discount allowed is expense? Yes. Discount allowed is expense. Discount received is income. Okay. I got few answers. 1,000. Yeah, good. One five six eight, 1,568,000 total assets, total liabilities 700. Capital is 868. Now I want you all to calculate the net profit using the equation. Can you all do this? What is the net profit? Calculate the net profit. How much is the net profit? Use the net profit equation. Closing capital minus opening capital minus additional capital plus drawings. So I want everyone to give the answer. How much is the profit? Net profit. There is no additional capital. If there is no additional capital, you can have zero. Okay, net profit 448. 448. Closing capital is 868. 868. Opening capital is 500. Additional capital, there is nothing. Drawings 80. So 868 minus 500, 448. Okay. Now the next question is, there's a question. Yes. So can we also adjust the income and expenses to find the net profit? So you can also use the income and expenses, this calculation of profit, income statement. So even if you use the income statement, you can find out the net profit. So there you will have profit 200, this profit, this will be minus, drawings won't come. You take these items. If you take these items, you can get the net profit, which will be same amount, 448. Okay. So next, I thought of doing the past papers, but before that, it's better for us to understand the accounting process. So what we will do is, today I will discuss the accounting process, the prime entry books, all the basic stuff. Right, let me show. Already we discussed these two. Now what I'm going to do is I'll discuss the double entry ledger accounts and the prime entry books, this part. Prime entry books. Because that is important before we do the past papers. Okay. So I will discuss double entry, ledger accounts, prime entry books, and also I'll discuss preparation of financial statements. So if we have that knowledge, it will be easy for us to do the past papers. So example 3, I'm going to do a complete process, a very important point. Okay. So let's do example 3. Example 3. So let's do this. So in this example, uh, we have some transactions: credit purchases, credit sales, purchases return, sales return, cash receipts, cash payments, required, prime entry books, ledger accounts, trial balance, and financial statements. So we are going to do the complete process. So what is the process? I'll brief you all on the process. Okay. Right. So this is the accounting process. This is also very important. Accounting process. So initially, we do the transactions, right? So once the transaction is done, we collect the source documents, collecting the source documents, and recording the transactions in the prime entry books. Once you collect the source documents, you will identify the transactions, right? Whether it's a sales, purchases, return inward, return outwards. Okay, once you identify the transactions using the documents, we record them in prime entry books. Then from the prime entry books, you post the transactions into the ledger accounts and prepare the trial balance, then the financial statements. So this is the process. Okay, now we'll do the question. We'll do a question to understand this entire process. Okay, now already we did recording the transactions in the accounting equation. Now let's prepare prime entry books. Okay, so this is the example. As you all know, there are 7 prime entry books. Here, I'm going to explain the basic 5 prime entry books: the cash, receipt and payments, purchases, sales, return inwards, and return outwards. Okay, so then we will post them into the ledger accounts using the double entry principle, and we post them to the trial balance and prepare financial statements. Okay, example 3. So you don't need to write the question, I have sent it. Now let's draw a cash receipt journal, cash receipt journal, and cash payment journal. Cash receipt journal and cash payment journal. This is the format. The format. Okay. So once you are done with the receipt and payment, you can do the other journals. Return inwards, return outwards, purchases and sales. So this is very simple. Purchases, sales, return outwards, return inwards, cash receipts, cash payments. So this is a very basic format. If I do the cash receipt, 1st of January, let's say 1st of January. First of January, receipt number 1, narrative or the description is capital, analysis, other column, capital. Then number 2, bank loan. So when we obtain a bank loan, the cash receipt, cash will increase. Receipt number 2, date, receipt number, the narrative or the description, amount, and the analysis. In analysis columns, we will have cash sales, debtors, income, and other. January 15th from X Limited. X is a data credit sales. So it is from a data. Okay, complete the receipt and complete purchases. Purchases here. From A Limited 50,000, B Limited 60, C 90. So you can write it here. Sales. Okay. So try to complete the transactions, record the transactions in the prime entry books, and tell me these values, these two values. What is the total receipt, total payments, total purchases, okay, I want these values. from X limited, does that mean for debtors? Yes. From X means from debtors. Because X is a customer. X is a debtor. Cash payments. Purchases 90. Electricity 20. Purchased a vehicle. It comes under other column. Paid to A limited means paid to creditor. We pay for creditors. 30,000. Make it fast. Paid to B limited. 40,000. Drawings. Other 50,000. Bank loan repayment. Next, let's do the purchases. A limited and B limited, C limited. Credit sales XYZ. Return outwards. Return outwards. Purchases return. B and C. Return inwards. X and Y. So complete this. total. Okay, so in the process, once you identify the transactions, we record the transactions in the prime entry books. So this is the basic format for the initial prime entry books. Initial 5 cash, receipt and payment, purchases, sales, return inward, return out. And there are 2 more prime entry books. I will do that later. The petty cash book and the general journal. So requirement number 1, prime entry books. So next, we have to do the ledger accounts. So when it comes to the ledger, there are 2 types of ledgers. Let me come back. So let me brief you all about the double entries and the ledgers. The ledger. Now the ledger is the central place of keeping all the ledger accounts. It's a central place where we have all the T accounts, ledger accounts, right? So what is mean by ledger account? Ledger account means it has 2 sides, debit and credit. I hope you all know these points. Okay, so there are different types of ledgers. ledger accounts. This is also very important because there are some questions on this. Okay, if you have not copied this, I'll give a few more minutes for you all to copy this. Right, I'll give 2 more minutes. I'll try to complete writing the answers. After that, I'll explain the ledger part. Okay, so let's move. Right. So there are 3 types of accounts. We call it real accounts, personal accounts, and nominal accounts. Real accounts means the property accounts, land, building, vehicles, equipment, the properties, right? Personal account means accounts belong to people, debtors and creditors. Nominal account means income and expenses. Okay. So what I wanted to explain is the ledger. There is general ledger and sub ledger. General ledger is the place where we have all the ledger accounts. Sub ledger means in sub ledger we have different types of sub ledgers: debtors ledger, creditors ledger, stock ledger. So likewise. Okay. So in this question, I'll show the general ledger and the sub ledger both. Okay. Now let's prepare the ledger accounts. The second point, requirement number 2. Okay. So first of all, I'm going to draw the general ledger. In general ledger, we have all the ledger accounts. And after the general ledger, I will prepare the sub ledger for debtors and creditors. Okay. So we need a cash account. This is the general ledger. Okay. We need a cash account. Debtors control account, creditors control account. Then return inward, return outward, capital, vehicles, electricity. So I'm taking from this. These other items, you need individual separate accounts, and sales, debtors, purchases, creditors, you can have single accounts. So these are the ledger accounts you need. This is general ledger. This is general ledger. So using the double entry principle, we need to prepare this general ledger. There is a question, can't we open a common ledger for other column? No, capital is a different transaction. Bank loan is a different transaction. These you need to open separate accounts. These three. Income column and other column. Expense also same. This expense and these columns, these you need to open separate accounts. Right? Then these amounts you can take the total. What I have highlighted in green color, those are the amounts that you have to take to the general ledger. So start with these journals. Start with the journals. Purchases journal. Purchases journal. Double entries. Is there anyone who has doubts on double entries? Just send me a message if you have any doubts on double entries. double entries, assets and expenses, increase debit, decrease credit. Capital, income, liabilities, increase credit, decrease debit. Okay, so we will start with recording the purchases. Purchases double entry, purchases account debit, purchases account debit, creditors account credit. Purchases account debit, creditors control account credit, purchases double entry. There is a question. Can you show the double entries? Okay, yes. Let's see. Okay, so this is the accounting principle where we use for the double entries. Okay, assets and expenses. These two we have. Assets and expenses, increase debit, decrease credit. And the liabilities, income and equity, increase credit, decrease debit. So that is how we derive the double entries. So there are basic double entries. If anybody need more explanation on double entries, I will upload a video which I have done explaining the complete double entry system and basic double entries, all those things. Okay, anyway, I will upload in our Google Classroom. There is another question. Here purchases means the stock purchases. Yes, if they have not mentioned about the item, whether it's a motor vehicle, furniture, or anything, we consider it as stock purchases. Then the purchases done. Then sales. Sales double entry is debtors account debit and sales account credit. Debtors account debit, sales account credit. There is a question why we can't put stock account. No, stock account, we don't put it as stock account when recording in the double entry. We record it as purchases account. Stock account means in practically what happens is end of the year or end of the reporting period, we calculate the closing stock. So the stock account means it is the closing stock account. What you purchase, we have to record in purchases account. End of the financial period, we calculate the closing stock. That is how it happens. Return inward and return outward double entry. Yes. Return inward double entry. Return inwards 110,000. Return inwards is debit. Return inwards debit. Return inwards debit. Okay, so return inward means we are getting the stock from debtors. So debtors account credit. Return inwards account debit. Debtors account credit. Return inwards debit. Debtors credit. What is sales double entry? Sales double entry is debtors account debit. Sales account credit. These two. Sales. Okay, so there are some questions. Let me clarify the double entries. Okay, look at this. Okay. This side we have a supplier. Supplier means creditor. From the creditor we purchases, right? And we sell to the customer. So purchases can be cash or credit. Sales also can be cash or credit. If we are purchasing on credit, the supplier will become as a creditor. If we are purchasing on credit, the supplier become as creditor. And if we are selling on credit, the customer becomes debtor. So first double entry that you need to understand is purchases. Purchases account debit, creditors account credit. Purchases means it is an expense. Okay, we purchase. Or if we are purchasing by paying cash, cash credit, purchases debit. If it is credit purchases, liability increase. Liability increase means credit. So creditors account credit, purchase account debit. So anyway, remember purchases debit. Right? Always the purchases account is debit. Sales account is credit. Right? So to remember easily, you can use a method. Purchases debit, sales credit. So sales credit. Return inwards debit, return outwards credit. Right? I'll give a simple note. After this explanation, I'll give that note. Okay. Then return outwards means we are sending to the supplier. Double entry, creditors account debit, return outwards credit. So remember, return outwards credit and return inwards debit. Return inwards means we are getting from the customer. Then there may be cash payments and discounts. So discount received, double entry, creditors account debit, discount received credit, discount allowed debit, debtors account credit. So what I do is to remember this easily. We remember the double entries using opposite. Then it's easy to remember. Right? Let me give the opposite Okay, here. Right. You can write this. Okay, then it's easy to remember. Mm. Assets debit, liabilities credit. You can write this. Assets debit, liabilities credit. Then expenses debit, income credit. Expenses debit, income credit. Then debtors, or we'll write purchases and sales. Purchases debit, sales credit. Return inwards debit, outwards credit. Inwards debit, outward credits. Discount. Discount allowed debit, discount received credit. Discount allowed debit, discount received credit. These are common ones, okay? Debtors debit, creditors credit. All these are increase for increase, okay? There is a question. Is it okay if we put trade receivable instead of debtors? Yeah. Trade receivables, debtors, same thing. Then we can also take drawings debit, capital credit. Okay, so these are the main ones. Remember this. Remember these basic ones. Capital double entry is capital account credit, If it is cash account debit. This is I have given for increase. If asset increase, debit. Liability increase, credit. Expense increase, debit. Income increase, credit. Purchases, debit. Sales, credit. All these for increase. Then easy when you are writing the double entry, it's very easy to remember if you know this. Drawings increases debit. The reason is it's a reduction of capital. If the capital increase is credit, capital decrease will be debit. That is why drawings debit. Okay, so let's move on to our question. So we did purchases, sales, return inwards we did, return outwards. Return outwards 40,000. Return outwards. Return outwards credit. Credit. So creditors account debit. Return outwards credit. Return inwards debit. Purchases debit. Sales credit. Okay. So these four journals done. Now the cash receipt. What are the receipts? We have capital, bank loan, rent income, debtors, sales. So what I have highlighted. So one by one, you can write under debit column. Cash received is debit. Asset increase. Asset increase debit. Asset increase debit. So we have to debit the cash account and credit the relevant opposite account. So we debit capital, bank loan, rent income, debtors, sales, debit. There is a question. Can we record total amount in the cash? Yes, that is also correct. You can write the total amount debit here and credit the individual accounts. It's fine. Then I'll take capital 600, bank loan 500, rent income 200, debtors 180, and sales 120. Cash account debit, the relevant account is credit. Then the payments 1, 2, 3, 4, 5, 6. There are 6 payments. Electricity, vehicle, drawings, bank loan, creditors, purchases. So I take all the payments into credit side of the cash flow. And the relevant accounts we have to debit. Electricity, debit. Electricity account debit. Then the vehicle account 240 debit. Drawings debit 50. Bank loan 160. Creditors 70. Purchases 90. when writing the description, you have to write the opposite account name of the opposite account. Okay, so we have completed all the transaction, recording the transactions in the general ledger, right? Prime entry books, then general ledger. Now we need to balance the ledger accounts. Balance the ledger. Okay, so when balancing the ledger account, so if there is only one transaction, you can just leave that. If there is two or more transactions, you can balance it. What is the cash balance? Total debit 1,600, total credit 630. Okay, so balance is 970. Then we'll calculate the debtors account. It's 210. Creditors account is 90. One more we have bank loan 340. So this is the ledger, general ledger. Purchases also. The sales 620. Okay, now we can prepare the trial balance. Trial balance. Now you can prepare the trial balance. Okay, prepare the trial balance. Cash 970. Debtors 210. Creditors 90. Remember, all the expenses and assets debit, capital, income, liabilities credit. What is the total debit and credit trial balance? Yes. Return inwards, return outwards. What is the total? What is the total? Purchases, sales. Capital. Bank loan. Rent income. Rent income. Vehicles. Electricity. Drawings. So what is the total? Yes. Total is calculate the total. Then we will prepare the financial statements, and we assume that closing stock is 0. Okay. So next step, we have to prepare statement of profit and loss and the statement of financial position. Okay, so can you draw this? Statement of profit and loss and statement of financial position. This is okay. Yes, it's 1890. Most of you all gave the correct answer. Now prepare the statement of profit and loss and the statement of financial position. Okay, can you all find out the net profit, total assets, total capital and liabilities? What is the net profit? Find out the net profit. Right. So let's start. Cash 970, cash goes to the statement of financial position. Debtors 210, current assets. Then creditors 90, current liabilities. Return inwards. Return inwards will be deducted from sales. Then return outwards will be deducted from purchases. Here, return outwards. Purchases 290. Sales 620. Capital 600. Capital 600. Bank loan 340. Rent income 200. Vehicles 240. It's a non-current asset. There is a question. What is carriage inwards? Carriage inwards means we are carrying the goods from supplier to our stores. So it is expense. It is an expense related to purchases. Carriage inwards, carrying the stock to our stores. Once you purchase, carrying into the stores, carriage inwards. So it will be added to purchases. Carriage outward means from our stores, we are delivering to the customer. It is a selling and distribution expense. Carriage outwards is a selling and distribution expense. Carriage inwards is a purchases related expense. Vehicles, electricity. Expense. Then drawings 50. And there is no stocks. That's all. So if we calculate the gross profit 760. Net profit is net profit is 440. Net profit is 440. Very good. Yeah. Then total assets. Net profit comes to the reserve P. Total assets 1420. Total capital and liabilities 1420. So this is the full process of preparing financial statements. So we were able to do the accounting equation, and from the accounting equation we record the transactions in the equation. Then we calculate the net profit using the capital, right? So once that is done, we record the transactions in the prime entry book. I was explaining the accounting process, right? So once we are done with the prime entry books, the next step is ledger accounts. So in ledger accounts, when recording the transactions, we use the double entry principle. So once the transactions are recorded in the ledger accounts, we prepare trial balance by taking the closing values in the accounts. Then using the trial balance, we prepare statement of profit and loss and the statement of financial position. Okay, so this is the complete process. Right. So tomorrow, what I'm going to do is I will be doing the past papers for accounting equation. So I want you all to do all the past papers. Right. Try to do all the past papers and come. So if you all have doubts, anything you all want to clarify, we can do it tomorrow. Okay. So is it clear? Did you all understand? Okay, when you are studying, always see the broad picture, right? Overall picture. Then we can study one by one. Okay, so tomorrow, don't forget, if you can do the past papers and come, we can finish the entire accounting equation chapter. Okay, 2000, these are the questions. It's in the tute which I sent. Okay, so 2013, 2015, I will be doing all these questions tomorrow. 2019, 18, 17, 16, 15, 13. Right, so this is the past paper analysis. It's always better if you can do and come. Right. Okay. Any doubts? Any questions? Anything to clarify? Okay. So I'll see you tomorrow, same time, 6 p.m. Right. Good night and take care. And the past papers are in the. If you don't have the past papers, go to the Google Classroom. Right, in the Google Classroom, I have uploaded all the past papers. Check here in the classworks. Now I'll upload today's session here. Past papers. In this, you have 2000. Some students asked for 2020 and 21. It's there, 21 and 2020. You can get it from here. Right? It's here. 2020 also. Okay. So I'll see you tomorrow. Good night. Take care. God bless you.